Welcome to the Sand to Pearls Stock Market Commentary for market week ending Friday, July 25th, 2014. Market breadth. With this past week's market advance, our bull-bear point and figure ratio fell from 1.23 to 1.21, still in bullish territory. The total count of securities in bullish or bearish patterns rose 1%. to 2,050. The count of bearish stocks increased 1%, while the count of stocks in bullish patterns decreased fractionally. The Sand to Pearls PNF Market Breadth Summary Chart shows us a market now 10 consecutive weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 107 points for the third decline in 10 weeks. At a negative 129.99 points, it continues below all 9 tops above plus 100 and above all 6 bottoms below minus 100 in the last 35 months. Market Gauge Volume Analysis. In this week's volume analysis, the Russell 2000 ended in distribution mode. In the last 2 weeks, it had 1 accumulation day and 3 distribution days. Of the other indexes, the Diamonds Trust ended in distribution mode, while the S&P 500 deposit receipts ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Russell 2000 ended in distribution mode. Momentum. At Friday, 7/18 close, the CCI 20 signaled a zero-line reject long entry signal, and at Friday, 7/25 close, the CCI 20 dropped below zero, signaling the trade exit for Monday, 7/28 open. We will report the results of this trade simulation in next week's commentary. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 3 weeks ago, while the daily CCI 20 began a Woody's uptrend 8 weeks ago. The CCI 20 weekly continues above plus 100 after having shifted to an uptrend 3 weeks ago. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish, Comp Tech continues in the top 5. Brokers and disk drives have left the bottom 5 and entered the top 5. Computer hardware has re-entered the top 5. Gold and silver has left the top 5. Banks and networkers have left the bottom 5. Bearish, semis, and S&P retail have entered the bottom 5. REITs has left the top 5. Focus this week for Monty Pelerin's world blog, Economic Laws Are Not Optional, which summarizes nicely the case that the current Keynesian house of cards will inevitably fall. Here are a few points from that blog. Economic laws are less precise in terms of their timing and effects, only because they deal with human behavior rather than physical particles. The appearance of a recovery is more important for politicians facing another election or a legacy than the damage being done to the economy. Our economy has become totally dependent upon government spending, interventions, and subsidies. However, at some point, the system will not be sustainable. Markets will eventually end the meddling regardless of whether it is politically or economically feasible or timely. When that happens, our lives and economy will never be the same again. There is no mathematical possibility of escaping the economic bind we face without reducing the welfare state. When the game is perceived to be corrupt and exploitive, it is easy to rationalize immoral behavior at the level of the individual. Contracts, promises, and obligations start to become meaningless. For many, the phrase, "Is it legal?" replaces the phrase, "Is it right?" Loopholes in the law trump ethics. Soon even the law becomes less of a barrier, as cheating and stealing become acceptable for some. A massive political cover-up of the true condition of the country has been accomplished at the cost of making underlying economic conditions worse. A collapse is coming. It is unavoidable and will be worse than it should have been as a result of political duplicity. This week's Sand to Pearls Stock Market Commentary, submitted by Donald Pearl, www.s2pmarketsignal.com. Thank you for watching this week's Sand to Pearls Stock Market Commentary video. Hoping that your weekend has been very enjoyable, that you have a great week coming up, and wishing you true success.